Hello, everyone. Welcome back to another exciting episode of the RationalInvestor.com's Daily Brief. Woohoo, party! Happy Friday, TGIF, I suppose, and all that. With one caveat, the celestial bodies orbiting our planet are in a little bit of a funny alignment right now. So we ought to be very, very careful, not only market wise, and actually, I even just put a tweet out a few minutes ago talking about the insane volatility in the market here. What was my comment here? It's now eclipse time, folks. And actually, we've been talking about these lunar eclipses coming up here for quite a while. Interestingly enough, Bitcoin and crypto not really too affected right at the present, but holy moly, the broader market just jumping all over the place here. So our screen matrix, you can see up and down and all over the place. Fascinating to see though. Here comes crypto. So stay tuned, folks. In fact, I think Chris said that he was working a short on ETH, and he was told politely to walk away this morning. If anything, probably with an image like that, that's probably not a bad idea. Obviously today, Friday, we had econ wise, we had a big employment report come out of the States. Interestingly enough, some funny little tidbits inside the report, though, that kind of make you skeptical about what you're seeing in the market. Also, too, today being Friday is options expiry, so there's probably a lot of stuff going on around that. And then, as I said, we have this really odd celestial relationship right now. Not only do we have a lunar eclipse, but if I understand correctly, it's also a full moon. We've got Cole, our astrological guru. In fact, everybody was asking what color wizard hat does he have on? Does he have stars and moons and stuff all around? We're all sort of sitting here picturing Cole and his astrological trading desk. I'm not quite sure what you call it. Anyway, point here is we've got a whole bunch of celestial stuff that's going to inject just a ton of anxiety into the market right now. So, oh boy, go slowly. If anything, this is a reiteration of why we plan, why we vet, what are our reasons to justify us taking a trade. In fact, I had a potential short setup here coming in on the S&P 500 through this, but my trading plan says, especially on big econ days, late on a Friday, and of course, if I'm going to risk double top breakdowns, I want to see at least 2-to-1 risk reward. And I see that the VWAP is quite a bit above this 2-to-1 level. So my trading plan said, Brian, just leave this alone. And I see this volatility all over the place. I mean, this market is insanely volatile. So there's your ES chart pattern. Like I said, had big pop there on the employment report number, but actually when we dig into the actual news and econs and stuff, you're going to see that actually it's not really as optimistic as you think, and that's probably why they're fading this rally to a certain degree. Also, too, we're seeing just absolutely insane volatility in the gold market right now. And what's interesting is I did watch a really cool video overnight. Hugh's always a character to watch. I think he's one of the smartest market participants that you'll ever run into in your life. And you can see by his gear that he's kind of irreverent towards the whole system and wearing a suit and tie and all that while you're on camera, if anything. Kind of like what you see with Brian. Not really that concerned about appearances. But at the same time, too, excellent market analysis. And I have to agree with him. If the central planners want to slow the economy down, and they've just cranked interest rates through the roof, I think that places like commodity countries around the world are feeling the pain, just staggering amounts of pain here I mean, you see what's going on in Russia. What a joke all that is. Australia, I mean, it's like, $50 for a pack of smokes there. I mean, I'm sure with China coming back here a little bit, they're probably feeling a little bit better. And of course, you hear me constantly barking about Canada and Vancouver and the insanity here. Um, so interestingly enough, I do like the thesis that the Americans, the employment report that came out today was actually very strong. Um, Resilient US job market, and also the internals of the report, I think, are actually a bit more shocking. Um, the Fed is like specifically said that what they really want to do is try and control the inflation pressure and try and bring that inflation number back down. But you can see average hourly earnings are ticking up. Uh-oh, wait a minute, that's not right. Average hourly earnings year over year are ticking up. So not only month over month, but year over year, they're ticking higher. Remember, the Fed wants this to be around 2% annual rate. So you could make the argument that not only is this rate about twice what the Fed wants, but it's moving higher. It's moving up, not down. Now, it was interesting in this econ this morning. Like I said, non-farm payrolls came in 253,000. Market was looking for 190,000. So on first blush, everybody's like, all right, super strong economy, rocking and rolling. And you have to remember, and actually, I used to work with guys who would specifically say, like guys like, who's the most famous one that you'd probably know? There was a guy, Dennis Gartman. I don't know whether in fact, actually, I haven't subscribed or watched CNBC in forever. But he would say never ever trust these non-farm payrolls releases because they are highly, highly subject to revisions. And this is a very political tool. Obviously newspapers or, whatever the media outlet is now. Do they even do newspapers anymore? I can't even remember. I can't remember the last time I bought a newspaper, God, it must be years. Anyway, so the point being that this is sort of what the public is going to see. It's also part of the Bureau of Labor Statistics, which is part of the executive branch, which means that actually it can become an incredibly politicized tool. If the person who's running the executive branch of the United States of America's government, aka the president, wants the number to look a little bit different to help whatever political message they're trying to get across, these numbers will be slightly finessed. And I thought it was interesting going through the headlines today, this one line out of this is the Associated Press. I don't think it's too politicized. And they just basically said here, I thought this actually absolutely nailed it. In the report Friday, the government noted that while hiring was solid in April, that's that number you saw, the headline number, it was much weaker in February and March than had been previously. And notice they use the word estimated. Well, what does that mean? Does that mean that this report now and what you see here, these are just estimates? Is that what's going on here? So it is kind of interesting that they use the word estimated. In fact, job gains for the months were downgraded by a combined 149,000, or let's call it 150,000. And this is the kicker, right? And the hourly wages rose last month at the fastest pace since last July, when the Fed came out and said, oh my goodness, we got a problem with inflation. So it doesn't sound to me like they've got in front of this inflation bug just yet. I showed you the numbers. They're ticking up, not down. And, final line here, which may alarm the inflation fighters at the Federal Reserve. So as a result, I don't know whether you can really believe that this is actually that great of a report at all. In fact, like we said just a moment ago, the number came out and it beat by, let's call it 60,000, somewhere in that number, right? So the market was looking for a 190 or a 180. came in at 250, so plus 60,000. But if the previous months were overestimated by 150,000, then doesn't that mean that actually we lost 90,000 jobs over this 3-month period? A little bit suspect. So I thought this was a really good report and example. I suppose if I was teaching a course on trading and analyzing the market, one of the things that you would want to include in your sort of plan is, what do you do around fundamental event dates on jobs reports dates? I'll tell you unequivocally, I don't like to trade. This is just, it's too phony baloney of a number. Usually it comes out on Fridays. Most of our day traders don't work on Mondays and Fridays anyway. So, long and short of it here is I actually think that this is a bit of a trap. And, in great stock market fashion, I wouldn't be surprised if we pop on over to the options expiry date. It is the first Friday of May, so it's not the big fat monthly contract that we have to worry about. But if we use something just as simple as the S&P 500 depository receipts, this is the biggest ETF in the history of ETFs. In fact, actually, it was like the first one. Came out back in the 1980s. But here are the weekly options. We always say that the heaviest open interest in the puts, the strike, is actually where the institutional players have established a floor in the marketplace, because that's where they're willing to buy the market. So you can see here, 405s, they've got 46,000 in open interest. We come up here, 410s, they have 34,000 in open interest. We might scroll back, but you can clearly see if they can somehow get the market out to go out up above here, this is a home run. So you might even find we're at what, 411 right now, 410.65. I wouldn't be surprised if by the end of today we mysteriously find ourselves at 415 and all of these put options all expire worthless. If that's the case, then basically Wall Street hits a massive home run. Hookers and blow on the brokers this weekend in Vegas. Speaking of options, actually, before we go too far into today's broadcast, at TRI, actually, we do an introduction to the options business and the options industry and the 4 basic options trades, if you will, that I used to do when I was an options broker with customers. And that certainly isn't an exhaustive look at the market and how you use options. And actually, I was exceedingly pleased over the past, year or two. I've been kind of trying to wind down my participation on the site, and a lot of the site members have actually become very active traders unto themselves. And remember, at TRI, what we're doing is teaching you the principles of the process, right? And various different ways you can use these tools within the context of the whole process. 3 reasons for a trade, right? And then, vet your setups. And if it works for you, rock and roll. If it doesn't work and it doesn't produce the desired results on your paper trades, then don't trade real money with it, right? It's pretty straightforward. Anyway, the point of the matter here is our level 1 instructor is actually going to come on the not level 1, I beg your pardon, level 3 instructor is going to come on the Afterparty show today and talk a little bit about some of the strategies that he's going to teach students in our 3.5. Man, I think we're going to call it level 4 because 3.5 doesn't quite work in programming language for Sjord. But super excited to hear from Zach, our level 3 instructor in the Afterparty today. So anybody who happens to be a site alum and would like to learn a little bit more about options spread strategies, we've got Zach coming on the call this afternoon. Unfortunately, I think pretty much all the seats for this pilot project term that we had planned for this summer for his level 4 program that he's going to be, and I'm going to be his TA, so I'll be participating in the class as well. I think the seats are basically taken. We can always add you to the reservation list for the fall and winter program. But the long and short of it is we've got Zach on the call here for the after party, and I can't wait to talk to him about this program coming up. I'm super excited and super enthusiastic. Let's see if he's here. Zach, are you ready to rock these people's world in the after party today?
Good morning. Yeah, I am. I'm
Actually,
here.
that's one. Oh, sorry. Go ahead.
You always accuse me of sounding like I'm asleep when I say hello. So I was trying to say it a little bit more enthusiastically. Yes, I am here and I am ready to go.
Awesome. And even when he was like enthusiastic there, right? That's the one great part about Zach is he is level. And Brian, oh my God, Brian's can sometimes get a little bit enthusiastic, we'll call it. One great part about Zachy is he's very level, and you got to be if you're an options trader, absolutely. So anyway, so we've got that coming up in the after party. All right, back to the show. Um, let's see if Wall Street hits an absolute home run here today. It's interesting how I didn't quite have a very crisp setup come in here on the ES. I mean, it's up about 1.5%. Anybody who's sort of a longtime follower of me knows that I like to see at least 2% movement on an index for me to actually go, wow, that's pretty impressive. So it's interesting how 415 would be up in this area. If they can somehow jack the market up into this area, I think we're probably going to run into a bit of resistance here against 30 SMA. And this is the way I like to hunt setups in the futures markets is draw out my 4-hour levels and then drill down to lower time frame once I'm at a 4-hour level. It looks to me like we're doing a bit of consolidating right now, but by the end of the day, if they can get this up into that 415, 420 area, I guess up into this area, then the options boys hit an absolute home run. So we'll see how that goes for them. And I do think that a lot of this market action, especially on a day like Friday, is actually more to do with options expiry and options business than any news headlines that you see. The options brokers will use the news headlines to justify moving the market around dramatically. But I think, this is more to do with derivatives expiry than anything else. All right, so interesting to see crypto catching a bit. I always like to see W's. Keep in mind these are lower time frame charts, so this can flip over very quickly. What time is it here? 20 minutes past the hour. I guess I got about 10, 15 minutes. Um, I think everybody should know on the site, I am pretty much an open book. So anybody on the site knows that I picked up a little bit of this IZEA on this double bottom. It's kind of floundering right now. Might get stopped out on that. I don't know. We'll see how it goes. Picked up a little bit of this lithium stock in Canada. Same sort of thing. Put in a little W. I picked up a little bit of it. And then I picked up a little pharma name. Pharma name seems to be catching a bit of a bid here. So I'm pretty happy about that. But remember, folks, I mean, I'll tell you what I'm buying, but I'm never going to tell you what to do with your money. You might actually look at these after taking the education program going, Brian, these things don't match my setups. I'm not really interested in them. And I would not be insulted at all if you didn't, you just decided to pass on the idea. But to give you an idea of what it is that I'm doing in the broader stock market, that's an idea too for you to chew on. Speaking of Zach, we are very interested in doing this Microsoft bull call spread trade, buying the calls, write the calls up top. So this is the kind of stuff that I really want to get going here with Zach in the summer. It should be a really interesting plan going forward. So I do a little bit of penny stock, a little bit of bigger stocks. I like to do the bigger stocks through things like the options market. So we'll see how that goes. Not really doing anything in earnest. Actually, a trade that I did do that seems to be working fairly well. And actually, this is probably a really good demonstration for all of you is, I buy W. So kind of like you saw those other names, they were just starting to W. You notice that this one W'd. So I buy the W. It's up a bit here. Again, you're welcome to join me on this trade. It's everything that I teach, reload zones, bull divs. I think we got some really nice bull divs coming in here. Yep, nice bull divs. nice big fat W. So I went and bought a whack of this for my registered account. It's what I do. And it's pretty straightforward. No guarantees of performance whatsoever, folks. You all know that. Live by the sword, die by the sword. And that's just the way it goes. I did have a really, really good conversation with the boys at Hero Exchange. Let's see if I can show you. I can show you the tweet. It was like I think it was like about a 2.5 hour interview with Colin and his crew. Really enjoyed it. It was such a good conversation, I will say. These guys here. So, by all means, you can pop on my Twitter feed, CR Investor, and check that out. And like I said, had a really fun conversation with the gang. And talking crypto. Obviously, this audience is very crypto. And I thought it was very constructive. I'm still absolutely adamant. And, again, I speak with my money. I'm not going to tell you what to do with your money. But I've said to you guys repeatedly, oh, and by the way, things like our algo, we almost had a bearish cross yesterday, but didn't. And of course, now if we have crypto catching a bid, we might see that pop up. So the algo is still long. And I've said this repeatedly to this audience. Interestingly enough, crypto is one of the few markets that is actually spitting up lots of fives and sixes across the board. If we look at some of the tech stocks down in the States, they're also spitting up fives and sixes and stuff. So it doesn't really surprise me. And then, of course, things like Brian's signaling system, along those lines of the weekly commodity trend survey, the weekly 50% rule, there's Amazon there. So this is along the same lines that I want to hunt names that are down at the bottom ends of their ranges. So not really a big surprise. Looks like the data set's actually a little screwed up here. Actually, I thought we asked the team to fix that. But anyway, let's see if I can show you one. There were a bunch, actually. I know there were a few that were in sort of the tech space that were suggesting, actually, here, this might be a good example. Back in the end of April, here's the NASDAQ. I mean, talk about a proxy on the stock market. Yeah, that kind of image. So if you see something like this, I think there was probably a split here. But even if you just see something along these lines, it looks like this market is trying to, find some sort of bottom and lift here. So, well, actually, it might be just interesting. Actually, what is a really good example is we had Facebook come up there in the wintertime, same sort of thing. We actually had it come up down here. And I mean, look at the performance. Holy free holies. So you can see 61.8 to 78.6. You've heard Brian talk about his favorite fibs and all that kind of stuff. So, this is an interesting market state. I'm not going to say, the point that I made yesterday on that call that I did with Colin was, I'm not going to say that crypto and tech stocks and stuff are necessarily a short. I actually don't think so. I think what this situation is pullbacks are buying opportunities. I'm a little concerned in things like Bitcoin that prices moved up a bit. And on our weekly commodity trend survey, where the heck do I have that? There it is. Actually, it's probably better over here. I still have a lot of names in this crypto space that are sixes. And, in that conversation that we had yesterday, my comment was, you're seeing that Pepe coin pop and all that. That's actually a pretty good sign of sort of the end of the move. We haven't broken yet. And the problem, of course, is when the market breaks, it's going to be a big, ugly thump. And then you'll go, yeah, okay, it looks like the market's broken. But from that sort of weekly 50% level kind of idea, you can see Bitcoin's giving us a 6. The lowest rating, obviously, is a 1. And the highest rating is a 6. So getting a Bitcoin rating of a 3 right now, Litecoin 3, it doesn't really mean that they're shorts. It just doesn't mean that, there's a slant. Yeah, well, that's not the right word. That there's like a really, really attractive trade setup that's trying to form. And I think we've sort of talked about that. When Bitcoin was spitting out fives and sixes, we were down in this area, right? Just crossing moving averages, long way away from 50% rules. And you can see we're climbing the wall of worry here. So it's not really like Bitcoin's a short yet. I think the way that I'm looking at this, and clearly you can see the price action, if we do M out here and in some horrendous post, eclipse event or something like that, the market just pukes out the other side, you'll know that this bull is done if we go through these lows here. But as long as that doesn't happen, I can't really say that we're in a bear. In fact, according to the moving averages, we're still very bullish. And then to add, and this is where this is absolute music to the crypto people's ears. Go and listen to this guy. Because like I said, super smart guy. This guy's got more brains in his head than probably half of the TRIers put together. Mind you, some of the TRIers are pretty damn smart. But this guy, if he takes off his hat and you actually see the size of his head, he's probably got 2 or 3 times as many brains in his head than I have in mine. I've got a pretty small head. So the point being, listen to what he says, right? And the great thing is, he goes, I'm not a Bitcoin bug or I was some fanboy or anything, but he's, what's cool about it, and I'm not even going to say it. You got to go and just watch what he says about Bitcoin, and I fully agree with him. Especially if you can think like 3 to 5 years, and of course, all of our price objectives. I am building this little old lady portfolio. And I mean, I show you the transactions. I don't know how much more transparent I could be. You can see these are all the coins that I'm accumulating for this little old lady portfolio here through the winter time. I've just been buying, 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 buying. And I'm just going to keep on buying. I want to load up because, just go and listen to what he says about the crypto industry and crypto as an asset class. And frankly speaking, I have to agree with him. This is probably one of the only asset classes where you could realistically see prices double, triple, quadruple over the next 3 to 5 years. But you might also, in the interim, like we said, Bitcoin's not really a slam dunk buy anymore. You might see Bitcoin lose half its value here. I could easily see that happen. Of course, everybody's going, oh, don't say that. But the point being that I've been saying this repeatedly, pullbacks, weaknesses, I think this is the area of the market that I want to be investing in. And ironically enough, and again, showing this kind of data, do you see like Europe right now spitting out insanely bullish employment reports that, everybody's working that wants to work and the economy is growing and building? I mean, I'll say it, here in Vancouver, the construction is continuing. I mean, do you hear about that going on in Asia right now? I don't. I hear it in North America. So, and interestingly enough, this part of the cycle, this is actually when I think you're supposed to be US dollar bullish. So I'm just going to stick with that. The irony of it all is that good old Hugh here, the one market that he actually really likes is, of course, the one part of the market that everybody hates. And that's the bond market, which is kind of fascinating. But, I think I've shown you this, and I'll finish off this free video with this image. Let's see if I can show it to you. Market breadth. These are yields, which I'm going to show you. So then that means that prices should move the exact opposite direction. So this is sort of my inflation deflation proxy in the marketplace. This TIPS TLT spread. I don't think it's broken yet, which actually to me means that the Fed actually could go and raise rates more. But look at this 10-year yield. I mean, what letter of the alphabet do you see staring at you in the face? Boom. Actually, what letter? Well, I guess it is a letter. But what are you supposed to think if you ever see the market smiling at you? And remember, these are yields. So that means prices look the exact opposite. So ironically enough, and I am in complete agreement with the guy, which I think is great because he's way smarter than I ever am. He's bullish of bonds down here because basically, the public is just giving these bonds away now. There was a time in the market not long ago when there were guys that are like, I'm the bond king. Oh my God, look how awesome I am. And they were encouraging people to come in on the long side up top here, which is insanely dangerous. But right up here, they were encouraging people to buy up at like 170, 180. And now this thing has gotten like literally cut in half. The lows here were like 90. That's half of 180. So, especially if the economy is kind of, Fed's got to continue raising rates, inflation's still a problem. I don't know whether I would really consider this such a great buy. You can see the W down in here. I mean, that's your killer buy. And then my hunch is that's probably exactly where that guy is long from. But, in a weird sort of way, this is actually a market that I think is relatively, well, I'm not going to say it isn't risky. I mean, there's always risk involved in all of this. But this is a part of the market that I don't think a lot of people are really even the slightest bit interested in. But, this is the long bond, the 20-year. And actually, he was even saying he really likes this. But if the Fed really wants to cool the economy, then this will actually rally. As, like I said, he actually gets his wish. Where the hell is that? Oh, I thought I had the page up here. And you actually see yields on the 10-year treasuries actually topping out. And if this yield, I mean, just really simply put, we should at any given point in time look for like 38.2 retracements, 50% rules, all that kind of fun stuff. That's Colin and his pump chaser zone. So there's 38.2, there's 50%. If yields have to come down into these levels, then that means bond prices have to go up. And so I think that's where he's like, hey, I'm here to make money. So if I buy a bond low and I sell it high, I'm making money. So I thought it's fascinating. The two areas of the market that he likes is he really likes bonds and he really likes Bitcoin. Now, obviously, don't chase, don't chase, don't chase. Trade your setups, follow your plan, take appropriate risk. If you're relatively new to this game, you actually have to do 100 paper trades on whatever setup you like just to convince your subconscious that this stuff works. So go slowly. PMA for the win. I think I'll leave the public broadcast at that. I'm going to say, the broader market hasn't broken down. It's kind of interesting. I still want to buy this. But if the broader market does break down, then actually that's music to my ears right now because there's a bunch of names that I want to buy, but they're just not coming down to earth. If I could get this thing to come down to a reload zone in here, I'd be all over it. I mean, look at that chart. It's just beautiful. So over this period of May, June, I would actually like to see a bit of weakness come in to let me buy. Right now, market's still very strong. We'll see what happens. Actually, I even heard some people talking about potential harmonics coming. I think Zach even mentioned this, so maybe we'll talk about that in the after party. I'm not convinced that this is really the best place to come in and invest. I mean, maybe you trade things like bullish bots. I think in the public broadcast, I did mention that, we might be having bullish bots come in here. I got one low, I got two lows, but at the same time too, if we puke out here and we M out, because keep in mind, we still got pretty nasty divs going on here, then that means that the bull run in my eyes is done. So, if anything, the final message that I'll leave you off with here is I don't know what crypto really its mood is right now. And until we resolve this 4-hour range, and we painted this range, I think back here. It's funny how the algo is still long. So, we'll just keep following the algo and just let it be long. Me personally, I don't have any trade setups in here. And frankly speaking, I have no idea which way this thing is going to break. A move through 31, 32. You can see the big W's that are trying to form. Yeah, I could see a pop higher. However, if we break down below this 27, 28, then you might put a fork in her and she's done. Can't really make any conclusions other than that right at present. So there's your summary. Okay, everybody, I think we're going to leave the rant at that for today. It is Friday, 9:37. I think that's about a half hour or so that we did. As I said, pretty wild econs coming out today. Pretty wild price action in the market. Stuff is up and down and up and down. Looks like big crypto's catching a bit of a bid. Let's see if this holds in. And then also to remember that the options boys are highly incentivized to get this market up just a little bit higher. They're already going to hit a home run based on the options data I showed you earlier. The question is, can they finish this out on a big, strong up note into the weekend and absolutely knock the cover off the ball and hookers and blower on them, blah, blah, blah. Okay, have yourselves a great day. PMA for the win. All the best. The only thing left for Brian to say is bye for now.